Every 10 to 20 years, the semiconductor industry hits a wall, and every time it does, a new technology emerges to break through, reshaping the entire industry and creating trillion-dollar winners. Right now, we're at the beginning of one of these transitions. It's called photonics, using light instead of electricity to move data inside computer chips. And Nvidia, the company that dominates the current era of AI computing, has quietly committed billions of dollars to be at the center of it. In this video, I'll explain what photonics actually is, why every AI data center on Earth is hitting the same wall, and which public companies are positioned to benefit. Inside every AI data center powering the modern world, up to 60% of the energy consumed isn't being used to compute anything. It's being used to move data between chips, using copper wires, the same fundamental technology the industry has relied on for decades. Here's the problem. Chips have gotten exponentially faster. Modern AI GPUs can process trillions of operations per second, but copper wires haven't kept pace, and now the industry has hit a physics wall. Imagine a Formula One car stuck in city traffic. That's what's happening inside every AI cluster in the world. The chips can compute faster than data can travel between them. The more you try to scale, the worse the bottleneck becomes. This is called the interconnect bottleneck, and it's the single biggest constraint on scaling artificial intelligence. The hyperscalers, Microsoft, Google, Amazon, Meta, are racing to build gigawatt-scale AI factories. Data centers so large they consume as much electricity as small cities, and current copper-based infrastructure cannot scale to that level. The industry needs a new solution. The solution is light. Photonics is exactly what the name suggests. Instead of moving data using electrons through copper wires, you move data using photons, particles of light, through fiber optic glass. This isn't new technology at long distances. Every time you stream video content, your data is traveling through fiber optic cables, under the oceans at the speed of light. That's been the global standard for decades. What's revolutionary is bringing photonics inside the computer chip itself. This is called co-packaged optics, or Silicon Photonics. And here's why it's a game-changing shift. Light travels at 300 million meters per second. Electrons through copper travel at a small fraction of that speed. Light doesn't generate the heat that electricity does. Light doesn't degrade over distance the way electrical signals do. And critically, photonics uses roughly 10 times less energy to move the same amount of data. 10 times less energy. In an industry where energy costs are the #1 constraint on scaling AI, that's not incremental. That's a paradigm shift. Industry analysts project the optical networking market will grow from roughly $15 billion to over $150 billion within a few years, a roughly 9 times expansion. Nvidia's next-generation architecture, codenamed Feynman, is designed from the ground up to pivot from copper to photonic interconnects. Jensen Huang has publicly called photonics the key to the next generation of gigawatt-scale AI factories. When the CEO of the world's most valuable semiconductor company makes that kind of statement, investors need to pay attention. Here's where it gets fascinating. Nvidia isn't just adopting photonics for its own use. It's strategically investing across the entire photonic supply chain, including in publicly traded companies that could theoretically compete with Nvidia itself. Nvidia has taken major equity stakes in 2 publicly traded pure-play photonics leaders, Lumentum, ticker LITE, and Coherent, ticker COHR. Both build the laser systems and optical transceivers powering hyperscale data centers. Nvidia has also invested substantially in Marvell Technology, ticker MRVL, which designs custom silicon photonics chips for data center applications. Beyond public markets, Nvidia has backed private startups working on optical chip-to-chip communication and partnered with major European research institutions. Why is Jensen doing this? Because he's executing a classic strategic power move: own the disruption before it disrupts you. This is the exact playbook Nvidia used with artificial intelligence itself. In the early 2000s, when AI was still an academic curiosity, Jensen bet the entire company on CUDA and GPU acceleration for machine learning. Wall Street called him crazy. He wasn't. When the AI boom hit, Nvidia already owned the entire stack: hardware, software, developer ecosystem, customer relationships. Competitors are still trying to catch up. Now Jensen is running the same playbook, but this time with light. Photonics could theoretically replace much of Nvidia's core interconnect business, but Jensen isn't scared. He's invested, because if photonics wins, Nvidia already owns pieces of the winners, and if photonics adoption slows, Nvidia's GPU empire continues generating record profits. This is what strategic dominance looks like. Let's break down the public companies playing in the photonics space. Number 1, Lumentum, ticker LITE, the closest thing to a pure-play photonics investment on public markets. They build laser components and optical transceivers used in AI data centers. Nvidia holds an equity stake. As data centers move toward optical interconnects, Lumentum benefits proportionally. Number 2, Coherent Corp, ticker COHR, a diversified lasers and photonics play serving AI data centers, industrial applications, and semiconductor manufacturing. Nvidia also holds a position. Broader business exposure means slightly less pure photonics upside, but more downside protection. Number 3, IPG, photonics ticker IPGP, the fiber laser leader dominating industrial laser applications, often viewed as the value play in the photonics space, with a more traditional industrial customer base. Longer turnaround thesis, but potentially more attractive valuation. Number 4, Marvell Technology, ticker MRVL, a broader semiconductor company that has strategically pivoted towards Silicon Photonics. Nvidia has made significant investment for photonic infrastructure development. Larger market cap means slower price appreciation, but more scale and stability. Number 5, Applied Optoelectronics, ticker AAOI, a smaller cap play focused on optical components for data centers, higher risk, higher potential upside if adoption accelerates, not for the risk-averse investor. For diversified exposure, there are photonics-focused ETFs. The Roundhill Photonics and Optics ETF, ticker LYTE, offers broad exposure to the entire photonics supply chain in a single investment, the TEMA. Photonics and Optics ETF, ticker LAZR, provides similar diversified exposure with different sector weightings. Top holdings include Lumentum, along with meaningful positions in AXT and Aixtron. If picking individual stocks feels overwhelming, ETFs give sector exposure without single stock concentration risk. One important note, these photonics ETFs are relatively new products without long performance histories. That's a factor worth considering. Now the honest part, here are the 4 biggest risks to the photonics thesis. Risk 1, timing. Co-packaged optics adoption is still early. Nvidia's Feynman architecture is scheduled for release later this decade. That's a meaningful wait. Hype could outrun reality, and photonic stocks could correct hard if adoption timelines slip. Being early in a technology transition is often the same as being wrong, at least for a while. Risk 2, ETF novelty. The photonics ETFs are new products. They don't have long track records. Portfolios could shift, and new sector ETFs sometimes underperform the sectors they're designed to track. Risk 3, international competition. Asian photonics companies, particularly Chinese startups, are attracting massive investment. Some have raised billions at IPO valuations, dramatically exceeding US peers, which means US photonics companies could face pricing pressure in coming years, risk for vertical integration. If Nvidia's internal photonics research and development succeeds, they may not need to keep buying from Lumentum or Coherent. They could vertically integrate, which would harm the very stocks Nvidia currently invests in. What should investors watch? Nvidia's next generation chip roadmap, hyperscaler capital expenditure, ETF asset growth, international photonics activity, and any acquisition news in the space. These are the leading indicators that separate real adoption from hype. Here's my honest take. Photonics is not a fad. It's a genuine technology transition, the kind that happens once every 20 to 30 years in semiconductors. The physics don't lie. AI data centers cannot scale to gigawatt levels using copper. Something has to replace it. Photonics is the leading candidate. Jensen Huang investing billions is the most powerful strategic signal in the industry, but being early is the same as being wrong. Photonics stocks will face volatile multi-year periods. Some of these companies may not be the ultimate winners. Full transparency. At the time of recording, I do not currently hold any position in Lumentum, Coherent, IPG Photonics, Marvell, Applied Optoelectronics, LYTE, or LAZR. I've never held any of them. This is not investment advice. Do your own research. Speak with a licensed advisor for personalized guidance. If this breakdown was valuable, hit subscribe. This channel breaks down frontier technology stocks every week, plus daily 55-second breakdowns every weekday. Tomorrow's edge, the future before it arrives, and the stocks that get you there.